Shadim Shari, Green Paradise, it is indeed, unless you short the market. Unless you short the market, then you may not have gotten a good week. And yeah, at best, I might be sl- slightly slanted to defensive instead of being full on bullish. But you know, I'm not. Uh, I can't recall ever being completely 100% bearish. Um, but that's how I approach the market. All right, VIX going forward. If there is nothing to talk about, I am likely to skip the VIX because it's nothing to talk about. Okay, when it's this low, unless it spike over 20, meh. Is it a surprise that it's uh, mid-teens when the market is up? No, it's not rocket science. Okay, but if it's flashing warning over 20, then I will mention it. But for now, meh. TLT holding. I think I would say it would never go below 100 again. No, that would be silly talk. Okay, but for those that took my advice and bought it when it was below 97, winning. Not much to say, right? You get, hey, when you can make 3% on any position, especially bonds, as boring as it is, in a week or two, can be bad, right? Can be bad at all. In the last 2 weeks, as far as uh, TLT, where can it go? I sold a bunch of cover calls. I think altogether, was it, I think a dozen in the 108, 109 between those two. Okay, and let me bring back why 108, 109. It's not a random spot. Okay, it's not random. Right here, this purple line here. Okay, that trend line confluence with the resistance before. Look, if you go back last year, hit, 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 and then you get the nasty sell off starting in August all the way to the end of October, right before the bounce, and then you get this annoying decline for the next 7 months, 6 months at least, before it start to become reality again. But there was plenty of buying opportunities in the 90s. Plenty, 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 plenty. Now you see these two seem like random um, green vertical line. Can anyone guess what that is? That's the last two Fed raise, right? So the market is already back to the scene of the crime as far as the market is expecting a Fed cut next week. Well, guess what? Guess where it is? It is back to where it was the last time the Fed raised rate, right? And then, of course, if you look the last time, that's the reason I put that there for myself. If anyone pay attention to the chart the last couple of weeks, you probably noticed it, but it's been there. These two line has been there for a couple of weeks. Okay, but I put it there for myself to see, and yeah, it's a confluence of a channel. Okay, and of course the white line is a triangle that it broke out, and you see this vertical line here. that is potentially where it can go as well, short term, should it break the 108. So you got 112-ish, all right? So how high can TLT go between now and the end of the year? I do think somewhere between one, wherever this 200 MA is, okay, that will come down. No doubt that will come down. The question is, would it come down to the 112 area? Most likely, if you do the math, and I have done the math. Of course, it's also depend on how TLT behave. I project out in my spreadsheet that TLT will go up into the 107, 108 range by the end of September, and rise a little bit more into the 110 by November. And yeah, there will be a meeting of 112-ish between the 200 and that potential target. So yeah, there's a 12, but there is a potential 12 to 13% gain from here between now and the end of the year. That's not a bad thing. Not for me. Could be bad for the people that short bond, but not for me. I'm not going to complain on potential 10 to 13% return on bonds. Okay, so nothing here to hate. It's for some people, it's boring. Well, if you tell me I can make 10 to 13% return on my money in the next 3 months in any spot with little risk, it's not boring. All right, let's take a look at the indices. Are they back to short potential? Yeah, it's back. Okay, it's back to potential short. Dia, would I look to do some kind of bear spread here? Yes, the answer is yes, I would. I missed it the last time. Last time I was watching it, it was so close. I was waiting to see 417, 418. All right, on this day right here, on this day, on this last 2 days here, I talk about it. I'm like, yeah, would I short up there 418? Yeah, and then of course promptly the next day, it reversed already. So now, yeah, but now you're talking 420, right? So it will happen, right? The seasonality favor a bear spread into the end of October. So if I was to do a bear spread, for sure I'm aiming for about 6 weeks. Okay, so if I were to do a bear spread, the end date will be the last week of October. No doubt about that. So let's take a look at, let's go back 2 years and see for ourselves what happened 2 years ago. Okay, last year, you see this right here, exactly the same day. Okay, 9/14, and by the end of October, yeah, that's not, you're looking, let's say 346, 324. Okay, you can do the math, but that's a pretty good decline. I take my chances there, right? So for short. And if you go back 3 years, it's even worse in 2022, right? So you're looking at right there ish, okay, like 307, 308 by the end of October. Well, it dipped before. Oh, it bounced. Okay, so regardless, it did come down significantly, and then it bottomed out mid-October. So you still get a big, so regardless that it did not bottom at the end of October, it bottomed mid-October. Okay, let's zoom in real close. Sometimes the weekly chart doesn't give you a good enough pictures. So 21, 22, so I can see. All right, this is 2021 right here, right? So you got 352 at the beginning of September. If you're looking at where we are, 9/14 of 2021, well, there you go. And then of course you get a chance to sell it from 340, mid 340-ish down to 324. Okay, not a huge drop that time, right? But it bounced. By the end of October it was higher, and then of course in 2022 you got that nasty decline. Once again, very similar. Okay, you got 9/14 right here, bottom out 10/12, less than a month later, and then by the end of October it bounced. So back to what I said in the previous stream, I think yesterday or the day before, I talked about how tax loss season does not have to end at the end of October. It can depend on the intensity of people needing to sell, but it started in September. Okay, it can start. I just know that in the business, if you're in the business, the the command will come out after Labor Day. Harvest your loss. Okay, that's the instruction that you will hear across many trading desks. Start to look for where you can harvest your loss to offset your gain, to lock it in, to minimize tax. It's common. So it can happen between now and the end of October. It can be over before the end of October. So we'll see. But the chance to short is here for the year. How about SPY? Let's go to SPY. Okay, let's take a look at currently SPY. We are near the high of the year, and I will stand by my prediction that the high of the year is in. We can trade sideways for the rest of the year, but I just don't see a huge, like, oh my god, we're gonna go another 10% high. I don't see that. I see us, pushing, retracing, pushing, and retracing. Same thing here. Okay, if I go back 2 years, you see the same thing. Okay, same thing. I talked about this already. I'm not gonna waste more time. September, right here, 950, 914, bottom out near the end of October, and then bounce. Okay, so we already talked about that. So let's not waste any more time. Kia, QQQ, not Kia, QQQ. Perform a little bit worse than SPY. Has come nowhere near 503. Okay, it's a long way from 503, and I stand by that it's not gonna break the 52-week high. The high of the year is in. It can go sideways, chopping up and down and frustrate the bulls and the bears as well. It's the least of my favorite as far as short. My favorite to short is of course DIA and then SPY. Now you're looking at IWM. Now would I see this big symmetrical triangle? It violated for a day, but it's in, so right now it's right at the top of the range. Okay, so DIA is the worst performing of the 4 major indices, right? Not a surprise, small cap. It's up roughly 7-8% year to date. Look, top, bottom, top, bottom, fell out for basically one day. Okay, this day it fell out, but it closed right on the trend line, and next day it fell down and closed and basically there, but I would say it's out, and then next day it's back in, and then it hits. It's very TA wise, okay? The bot is in control. The bot is usually in control, okay? At the end of the day, the bots are usually in control more than the average person, more than you and I. We're never in control. All we can do is trying to front run the bots. All right. So IWM. I'm not gonna short here. I wouldn't recommend anyone to short IWM right here. But I do think if you are a fan of TA and a fan of symmetrical triangle, buying down in the 210 range here might be a good trade for you're talking less than 5%. Okay, so it's not like a huge money maker. I mean, there's better place to put your money. It's better place to put your money in small cap. Okay, I wouldn't buy the indices, but if you're lazy and you want to just buy IWM, you believe in Tom Lee. If there is a breakout of the triangle, you might see 232. There's your 10% move. Okay, you got your 10% move. If it can break out into that, but then that is a sell. Okay, that is a screaming sell up there. Remember, I didn't call this in, but this is a channel. I should change this so that it's a proper looking channel. If you have it, if you're a believer of IWM, you can believe it, but also believe in the TA that tell you when to sell. Okay, look, bottom, top, top. Okay, it never get to the bottom. So on a pullback, is it a buy below 200? Yeah. Okay. To me, that would be a spot that I would mind buying. Channel low. I like to do that. All right, move on. Max 7. Tesla, no. Not chasing here, not buying, not. If you have it, you should be trimming, right? Can it fill the gap? Uh, I, earning season is over. Period. What's the catalyst? I don't know. Okay, I don't know. Who knows what the catalyst is? For me, it's a trim. If you're brave enough to do some kind of bear spread for a drift down, that might be the better play. Nvidia, I did trim. I have an order in to trim up here. Okay, and if I get up into 123, 124, yeah, I believe there's an order up there. I have an order in at 121. I throw out an order to trim at 121 yesterday, and that did not happen. So it is what it is. It was a day order. It expired, but I leave the 124 where it is. Okay, I leave it up there. Apple. The new phone event was so uneventful. There was a time where everybody watched on the internet the entire event and ooh and ah. Who cares? Seriously, who cares? I don't. Some people care. And you're talking to a guy that used mostly Apple product for the past 25 years, so I don't care. Nothing here to see as far as buying or selling. Me no care. Okay, so if you have it, I would say at least have your stop in, right? Somewhere here. If this break, you can see another $10 drop down to the 100 MA. Now, is it a screaming buy at 200? Yeah, that's the spot. Otherwise, who cares? I don't. Amazon, trim, trim. All right, it's a trim. I did trim. Would I trim more up there? Yes. Show me 192 and I'm out. Well, I'll be out more. And of course, I'd be out big time 201, right? Where would I buy? Down here, 172, channel low, ref low, 200 MA confluence, all that down there. Meta, no. Would I sell up there? Yes. Okay. I have an order right above 544.5 in case it decides to peak over the 52-week high and then rejection. So up there. For me to buy, you got to come all the way down here, right? The 200 MA, the white line, the confluence. Otherwise, nah, nothing to chase here. And I'm okay holding my position for long term. But if there's a stop, I would say use the 50. If not, use the 100. You got to have a stop somewhere. All right. 50 might be too tight. I think 100 is a wise one because if I break the 100, I do think you can see the 200. So that's a long way down. Too far, okay? 493 to 462. Too far to suffer the pain. That's where the stop for half of my position is. Google. I like Google. I didn't get a chance. I was hoping for I was planning for the gap fill. Didn't happen. I sold put spread, so at least I make money there. Would I buy here? The problem with Google compared to Meta, Amazon, and all those things is if there is tax loss harvesting in Max 7, this is the spot, right? So can Google chop sideways for the next couple of weeks? I think it can. I think, sure, I miss buying here, but I do think I will get a chance between now and the end of October. Could be next week, could be in 2 weeks, who knows? But I do think there is sufficient loss here that you will see because guess what? It has been a brutal last few months in Google. It's a lot of loss here, a lot. Okay, so you can see it. If there's one spot in the Max 7 that there is tax loss pressure, I can see it in Google. So I can see it come down, and if it comes down to 147, 148, yeah, I buy. I missed it the first time. I won't miss it the second time, and I will still sell put spread at 140, 135. Okay, that's an easy one to sell. Netflix. It's a trim. Okay, if you have it, I don't. It's a trim. Would I buy Netflix at the 100 MA? That would be the first spot. Would I buy at a 200? Yes. But otherwise, meh. Okay, no. Okay, let's talk some old tech. Adobe. That was the screaming sell up there. Okay, you're talking the fib plus ref high up there. It's not random. Okay, it's not random. A lot of people that didn't sell up here, that held on, right, suffer. Okay, look at this. Let's review the psychology of investors slash traders. Okay, so let's imagine that you, doesn't matter where you bought it, but if you have share up here and you held on this gap down and you saw this you suffer this nasty slide for 3 months, and then you see this gap up and then it got back decent and you greedy, you didn't sell, and then you suffer this again. and then you didn't sell, and you suffer this again. Hopefully, the third time you learn your lesson. So I think there's still one more smack to the stubborn greed up here before they're all gone. Before all those people that beat themselves up are gone, and then, but yeah, for me, Adobe, no. Would I buy Adobe here? Yes. Okay. I saw put spread on the dump. I bought a couple share here and there. Would I buy more down here? Yeah, absolutely. Okay. But it got to be down. I have no fear buying down here in a low 500. All right. So now, can it fill the gap eventually? Anything is possible, but it would take an overall market sell-off of the Nasdaq for Google, for Adobe to come down there. Okay, so be careful. Cisco, nice bounce, came down to the 50. I missed that. Okay, I missed that. By the time I see it, it's too late. But yeah, I have a standing order to buy some at 47.5. Okay, and that's too low. But yeah, when this came down, I'm just like, maybe I should move that order up. I didn't do it, and boop, it ran. Nothing to do there. Okay, nothing to do there. CRM trading in the tight triangle. Okay, high, high, low, low, high, low. So would I say buy at 245? Yes. Would I say trim at 268, 269? The answer is yes. Look, the last many times it get to the 200, it couldn't hold. See, up, fail, up, fail, up, fail. So yeah, this can go sideways, coiling for the next 3 months. Okay, the way the pattern look, based on my estimation, we can see this triangle run all the way to the end of the year. So it can coil in the 250 range for a while before the next big move up or down. Okay, let's move on away from Max 7 and OTEC. Pharma. This is where money came out. Okay, there's definitely a rotation chasing big tech and big financial this week, and I think most of that money came from here. AbbVie, yeah, to me, there's nothing here. Okay, there is nah. Would I buy AbbVie at the 50? No. Would I buy AbbVie at the 100 and 200? The answer is yes. But until then, if AbbVie came down to the 50, then selling puts at 175 is a no-brainer. Okay, I would not be afraid to restock down there if I get a sign. But naked put 175 if I see this. Okay, if and when that happens. But until then, me no care. Pfizer chopping sideways. Yeah, it's there will be a move higher, but until then, sideways. Okay, collect your dividend sideways. Eli Lilly, I wouldn't buy it here. I sold out everything that I bought on this dump up here. Well, I sold out up here. The last one was like just below 900. So yeah, I didn't get it all the way up to the all-time high. It came down. Would I touch it here? No. Would I touch it at 856? Maybe. Okay, no doubt the gap fill. Okay, gap fill. 806-ish. Yeah, I like that. Okay, that is a volatile stock. So when the gap fill happen, buy some. I trim Vertex. Okay, It's would I trim more? Yeah. Would I sell out up there? Yeah. If Vertex get anywhere above 500, I will start to liquidate the rest. Okay, I'm not gonna sleep on that. Okay, because it's a volatile stock. Okay, it's a kind of stock where even owning 10, 15 share is a lot of money. JSK, um, yeah, I still hold on to my share, but there's a stop. Okay, the stop is up right there. Okay, it's too much gain to give. Now, would I buy down here? Yeah, I would. I would look back up the truck down here, but for now, it's getting pretty close to my stop, and I don't mind. I don't mind getting stopped out on the share. It's been a nice run. Okay, so last on this is of course BIIB. I sold put spread 192.5, and then I sold 190 for next week. 190, 185 put spread. Yeah, it's I like Biogen here. Now, what do you see? Tax loss. Okay, so be careful. Um, I sell the 190 with the potential that that might be a sign next week. Okay, and if it's drift lower, then you know, hey, since look at since this is the start of the year right here, 260 ish, 260. So you don't think there's tax loss if people that didn't sell here or people that buy here? Yeah, they got lost. Okay, they got a lot of loss. You're talking 10 to 20%. So yeah, there will be pressure, but to me, it's one of the better uh, potential big return coming to the end of the year. Biogen, I like it. Let's do one more. Merck, nothing to hate here. Okay, I mean, I saw put spread 113, and that did well. Sure, it was a little bit dicey on this dump here, but yeah. And then I saw on this dump here, I saw 111 for next week. That should be fine. And if I get a sign at 111, I will not complain. Trust me, I will not complain. But yeah, nothing here to hate about Merck. It is near the bottom of the channel. All right, let's move on to banks. Goldman Sachs. I bought some. I did not trim any, but would I trim up there in 490-ish? Yes, the answer. I think I have an order in at 491 to trim, but I bought down here, right? Not a lot. Same thing with Morgan Stanley. I bought right here, 94.5. Okay, that was my order. I had more order down here at 93, but that I'm of course moving that order up. It was 93 last week. I will move it up to 93.4. All right, so that if it tests the 200, then I will add. But I'll put more order at 94.5 to add more. But trim, yeah, up there. Okay, if it get anywhere near 100, I'm trimming. Okay. Visa, I did trim, and more will go out up there at 291. I have an order to trim 291, but yes, I have trim. I trim, I trim, I trim, and I will trim at 291, and I probably put in a stop at 281.47. I probably put a stop right there. It's too much to. Hey, I bought it 258 down here, right? Come on, that's a lot to give up, right? So no, I'm not giving up 10% plus? No. Would I buy back? Maybe 270 if I get stopped out, right? The 200 MA, and it violate the 200 MA before. So if there's a market sell off between now and October, yeah, you can see that again. So I don't mind getting stopped out at 281 something, and then buy back $10 lower. It's $10. It matters. Schwab, um, I sold more cover calls. Okay, I've been selling cover calls on my 400 shares between 65 and 67. Depend on where the stock is on Friday. I restock, and this time I sold 66, and I'm fine if it's taken away. It's profit. Okay, it's I like Schwab here. If I didn't have any share, I would be buying. Or actually, I did sell a put spread last week that expired yesterday. It was a 61.58 put spread, and I will do the same next week. On Monday, if there's any kind of weakness into Schwab, I might do a 60.55, something like that. Okay, it's a no-brainer. When TLT heals, there will be a time where Schwab will come out and say, we resume dividend, we will resume stock buyback because our balance sheet is healed. And yeah, it is healing. TLT is bouncing back. Okay, so it's looking good. Hey, let's you know where TLT is. Okay, it is higher for the year compared to the end of last year. And look at Schwab. Okay, this is where Schwab is at the start of the year. So it's not all that far away. Okay, so and TLT is bare. So give TLT time. Okay, Schwab ran up too much. Okay, this TLT was flat or down since Christmas, right? And look at Schwab. It was silly the way the market reacted. Okay, if they stop buyback and all that stuff because of the balance sheet, because of bond, why would Schwab did this when TLT was not doing anything all year, and now the TLT is healing, and this, come on, easy money. Okay, well, I would say easy money. I say it's less stress money. Okay, I'm not a fan. Well, Schwab is the owner of Thinkorswim, this platform that I'm using. So yeah, I'm not a there's people that hate Schwab, and then there's people that use Schwab. I don't care. They have a lot of money. All right, so that's Schwab. Is there Morgan Stanley? I talked about Morgan Stanley, right? Yeah, I already talked about Morgan Stanley. Bank of America. I made the Bank of America. Would I buy Bank of America 200 MA? Kind of the confluence of 200 MA and this white line. Yeah, I'm guessing the white line means something, right? I don't put the white line for no reason. So let's back up 3 years to see where that white line is. Yeah, it's this support resistant here. So yeah, to me that would be the spot. But also keep in mind Warren Buffett. Okay, he didn't sell off billions because he think it's a great investment. So be careful. I'm careful with all my financial, right? The reason why I have exposure to Morgan Stanley and Goldman Sachs, because they are more exposed to the stock market than consumer lending. Okay, that's the key. The key word is consumer lending. The JP Morgan, the Wells Fargo, the Bank of America, right? So in a recession, you have higher delinquency, default, all those ugly things that you associate with the recession, they will hurt the Bank of America, the Wells Fargo, the JP Morgan more than the Morgan Stanley, the Goldman Sachs. Okay, so there's a reason why I tend to focus or put my money into the Visa, the Goldman Sachs, the Morgan Stanley more than the Bank of America and the Wells Fargo. And if you don't know, let me repeat one more time. Visa does not hold the debt. When you swipe your Visa card, they make money off the swipe. They make money off the terminal machine. Guess who hold the debt? JP Morgan, Wells Fargo, Bank of America, okay? When you use your Amazon Prime card, like I have for my Visa, it's Chase that has the debt. It's shocking to me that after all these years, there's still people that don't understand how Visa make money or who hold the debt, okay? The debt holder is what you should be worried about. All right, let's end this. Well, we have banks and gold left, so let's talk. Well, we have we're done with banks. Let's talk about energy. There's a nice bounce and a nice rip on USO. Does not mean that I want to buy this. No, no. Would I sell 66 below? Yes. I did close out my 67 put before Friday because I didn't want to risk it. Okay, it was even money. I made money on the 66, and I sold on this dump here. I sold the 64 for the next week, which is fine. That would be that would make money too. But until yeah, to me, whatever the bounce is, yeah, it's temporary. I don't buy it. Okay, I don't buy it whatsoever. Oxy, is this the bottom for Oxy? That's ugly. I talk about this for the past couple of weeks. Where's Warren? Where's Mr. Buffett buying his Oxy that he loves so much for the past couple of years? Not this year. I have not heard a peep. If I'm wrong, let me know. But I have not heard a peep from Warren Buffett as far as adding to his Oxy position that he did all of 2022 and all of 2023. So something is afoot there. Okay. Give me a second here. So avoid Oxy. How about the other oil player? And CVX, bigger dump. I like CVX here. I did not add. I thought about it. I'm just like, what prevent me from adding? Even though I do like buying in the zone, is tax loss selling. No doubt, I do think there is tax loss coming for this, and yeah, it's no rush. Okay, no rush. Plus, my negative view on oil altogether, I'm like, it's no rush. Absolutely no rush. Okay. Real quickly on natural gas, it's moving up. It's at the highest point since July. Can you believe it? Since July 4th, this has been, yeah, it has been moving up. So what does that mean for the other? That mean that these are moving up slowly? Yeah, that could be. Okay, not Charter, Chesapeake. Okay, so I think the problem with Chesapeake, once again, tax loss. Okay, so just got to be patient. There will be time to add much more, and I'm just buying my time here to add big. It's a small position for me because I was not bullish on energy for a long time. I think natural gas has bottomed. That's why I bought in a little bit, but for now, it need to prove to me after the tax loss is done. Okay, so no need to be a hero. Same thing with CTRA. Okay, the other small player. So yeah, it's tax loss. there's tax loss. Okay. All right, let's end this week on gold. All right. GLD, you are at the fib right there. It nailed the fib. Okay. This is how you do the fib. Okay. When a stock hit like a 52-week high and then retrace on this move, then you do a fib retracement. That's how I do it. Okay. And I kept that fib retracement until when? Until this. After it break out, I still keep the fib retracement. Okay. Until this. When it break out, then I switch into a fib extension. That's how I do it. Okay. So keep in mind, it's two different things. The fib extension help us determine potential rare air above. Some people will call it price discovery because there's no reference on any kind of TA. There's no 20. It's above 20, 50, 100, 200 moving average. So it's above many things. So where can it go? Big question mark. So they use the term price discovery. Some people call it rare air, whatever you want to call it. But yeah, so the next fib is up there. Okay, 247.2. Just use a fib as your next target. Now, what happened if it retrace? Then we can talk. Okay, let's say it hit here and then it come down, and it come down. Okay, if it come down to the 20 and bounce, I will leave the fib extension as it is. If it come down all the way to this point here, okay, of the 0%, if it come down and violate that, then I will go back and take out the fib extension and do a fib retracement from here, from this point here to the high wherever that is, and that would be my full range of a fib retracement, right? So it's always, you got to pivot between fib retracement and fib extension. So for now, the fib extension is in play, but if there is a pullback and if it touch this 225-ish range, then I will go and flip from the extension back into a retracement with a different range, right? So keep that in mind. GDX. Yeah. If you bought on the dip, I got a sign. I got assigned a whole lot. Okay, I sold a lot of put, 37.5, a lot. Even 36.5, and that was a sign. That was crazy. I'm just like, give it to me. Give it to me, right? And am I gonna complain? Selling out at 38.5, a sign, all of them? No. Okay, I take it. I take the $2. I take the $2 gain in 1 week. And it's 52-week high here. Okay, it's I was telling everyone that the catch-up trade is done here, and I got out mostly. I just have 200 share left out of 800, and then I went up big, 900 share, and then I'm back to 200 shares. So trade the range. Okay, so for now, the catch up to GLD is done for now. Would I trim more of my GDX? The answer is yes. If I see 41 and above, yeah, I trim some. I still have over 200 shares. So yeah, other than that, nothing here to worry, right? And that should do it for today. Have a good week. Hopefully everybody that is in the market make money. You should. That you short. All right. Good luck, people. Next week is a big week. Okay. Next, to me, this entire past week is uneventful because I don't know why anyone would worry about CPI or PPI. We know it's coming down. Okay, there is nothing for those that follow me for the past 2+ years. Last week is the least eventful week for me as far as CPI. You didn't hear me making any kind of prediction or how big the market will move. It's been coming down. Okay, it's a non-issue now. For now, it is a non-issue. What matter more than anything since uh, August is employment. CPI has come down significantly the last 2 months and will likely come down for the rest of the year. It is the employment number that the Fed focus on as far as how much they cut, how often they cut between next week and the end of the year, and that will be the driver for the market. The econ data that the market will focus more than anything else between now and the end of the year is the employment data. Whether it's jobless claim, unemployment rate, new job, blah blah blah, it's all jobs. Okay, between now for a long time it was CPI, 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 inflation, inflation, inflation. That's all you hear for the past year and a half. Inflation, inflation, inflation. Now it's job. Okay, it's all about that. Okay, so that's all we care. We don't. I don't care about the CPI. In fact, I wasn't even worried about that. Okay, it's a non-issue.